What's happening with the price of gold and where could it be heading next? I take a look in my regular weekly report. Hello, I'm Stephen Ho, trader and founder of The Stock Hunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. So some sentiment indicators first up to help give us an independent viewpoint separate from the price. Then we've got seasonality at the bottom, that grey shaded area. Flat at the moment, picking up December time through to spring, so let's give that a neutral. The red line is the large commercials, black line the large speculators, commitment of traders data, and as we can see, and what we want to see, is the red line doing the inverse to the price and the black line following the price to give us our bullish opinion, and at the moment it's doing that. Price just slowing down a bit, trading above its moving averages, but yeah, confirmed bullish in the shorter term at the moment. So the big takeaway from the weekly line chart for gold is that the price is holding above that Fibonacci line around the 1840 line, which gives us encouragement that the price might push on up towards 2000 towards the end of the year, and that's going to be a key sort of support area, that 1850 1840 area. If it breaks back down from there, it's into that, say, yellow box area between 1840 and late 1600s 1700, but at the moment it's looking more encouraging. So onto the daily Heikin Ashi, we go to the bottom there, the two lines both bullish, that's the RSI and the regression, so signals looking good. Volatility and volume have actually dropped a little bit, which I suppose marries into the flattening off of the current price increase rally that we've seen, so we want to see a bit more positivity there if that's going to continue. Now if we go on to the price direct, we've had our buy signal of a week or so ago outside the two pink line box breakout setup, and we are sort of heading towards the top end of the two standard deviation regression bands. That's that light blue shaded area there. So pullback wise, we expect something maybe back to the mean around about $1,800. If it continues back down, then it's down to that sort of 1700 area, but we can see a bit of a flat trend really over the year, and the price just bouncing in and around those sort of ranges, so it's going to need something pretty decent on the fundamental side to get it past 1900 at the moment, but in the shorter term it is looking a bit more bullish. So the Renko chart, $5 block size, straight onto the signals, all bullish at the moment, and then on to the price. I've set the Fibonacci this week on the highs and lows of that sort of range that we've been seeing in the price, because it's like to bounce between there, so I thought that more significant for the analysis. Currently we've had a little buy signal, a couple of buy signals in the breakout setup, the pink lines there. Price moved back into that though, so neutral there, as we've seen that price slowing down around about that 78.6% Fibonacci line, which is 1870 1875 sort of zone. The support in the real short term, 1839 1840 at that 61.8% line. Then next significant Fibonacci 38.2 round about 1800 late 1700s. If it can continue to the upside, I said in the looking at that Heikin Ashi chart, it's going to need something to get it past those June highs of 1900, so could be a bit of a headbanger there before it bounces back down. So that's first target upwise, and then the next one, if it can break through, is up to 1970 and then threatening those 2000s. So at the moment in the short term it's calmed down the price, so it's more weak bullish at the moment, waiting for that next move. Something new for the gold weekly report, I like to use the line break chart, not to be confused with the line chart we looked at the start, for reversals and turning points in the shorter term. And I use a 4 setup here, but with a 2 bar turning point to give me those signals. So you can see that purple line on the charts there. Gets below that, then I've maybe consider a short trade, and that's around 1860, 1862 area. So something for the swing traders, one's calling the turn, to think about. But at the moment you can just see the start of the red block, the bearish block, occurring, and like I say, you've got to wait for it to get through that 1860 area to put on a short trade. We've had a few subtle changes from last week. Seasonality gone a bit more neutral, as has volume and volatility in the Heikin-Ashi chart, and the price has slowed down a bit, so I'm going to give it a weak bullish. I'm going to maintain the weak bullish outlook for gold. If we're focusing on the signals, then to the upside 2.25 and 4.75 to 1, bit of a tighter, more aggressive stop there, and to the downside 2.1 and 2.75 to 1, so still something decent to the downside, but overall weak bullish this week. So can gold maintain its bullish outlook at the moment? Well, seasonality might help it out over the next few months as it tries to target that $2,000 area. Let me know in those comments below where you think it's heading next. Do you have any opinions on gold? Like I say, love to hear from you in those comments. If you've liked today's technical analysis, want to learn more, I'll put a link in the description below for you to follow. If you've liked today's video, then please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of content I'm going to produce just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.